What's up, guys? Let me know if you guys can hear me and see the charts. Perfect. How's everyone doing? Good day, good week? Cool. All right, so if you have to leave early or you want to review it, this will be recorded just like the other calls. Okay, I will keep an eye on the chat, or at least try to. I do want to go through markets and talk about stuff, so I'm going to stay mostly focused on that. So if you have any questions, I'll be sure to take a look at the end after I go through markets. Today was one of those days, right, for me personally, and I hope you guys caught some of the volatility today, where number one, I haven't looked at the entirety of the session. I just barely skimmed through real quick, right? But in the morning, where I do my trading 95% of the time, right, New York AM session, I took 0 trades today. Now, this was one of those days where in pre-market with an RTO and just my own analysis and trading as well, I had a very, very good idea of what price would do, but there was no opportunities for me personally based on the framework of that analysis, okay, that I feel comfortable entering a trade. Now, we're still going to review and do my daily routine of going through the charts and just trying to look for opportunities that I missed, or just to continue to stay in sync with the markets based off of the concepts that we utilize, ICT concepts and things like macro power 3, macro signatures, etc., etc. Okay, so I won't harp on what we discussed in pre-market this morning too much, particularly on the move upwards, that first aggressive push to buy side on both indices. Okay, that was just beautiful. And that's what I wanted to be a part of. But like I said, I was not, comfortable or confident with risking based on any of the price action. Right at 9:30, we just ripped up. So again, if you caught some of that push up, great job, right? Me personally, I wanted to wait for a better opportunity. It did not come, and that's fine. And that's trading sometimes, okay? That being said, once we go through the 1 minute chart and that delivery up to that buy side upon 9:30 open, there was signatures, right, that gave me strong confidence that price would continue higher based off the higher time frame analysis that we discussed in pre-market today. But even on the 1 minute chart, there was just looking at that order flow when I was looking at the opening range, I could say, okay, this is probably going to support price and go higher. This is probably going to fail to act as resistance, etc. Right? But just because I can identify that doesn't mean I have to risk my capital, my account every single time. Okay, I want to wait for the best of the best setups that I am confident in and that I can read. Okay, so we'll start on NASDAQ, then we'll go to S&P. Essentially, right, yesterday, if you guys recall from the weekly outlook and Monday's pre-market call, I forget which one I did with the entirety of the Discord, but we kind of just reiterated the same plan coming into this week. This swing high from August 1st was our clear as day draw on liquidity, and the lower time frame swing highs that fell just short of that. Really just beautiful Monday, and even today, great delivery upwards, right? I'm going to review the reversal down, and then, like I said, I didn't really look too much in depth for this session, and that's kind of what this is going to be, my journaling and review process here. Okay, so I want to go through the higher time frames and just real quick discuss what I was thinking coming into today, right? We just purged a buy side objective, so this swing high that we were looking at to start the week, right? That was smashed through aggressively, okay? And now our job, if you recall, is to say, okay, are we going to continue higher or are we going to reverse? That is still our job, and we'll talk about that maybe towards the end of the call, a little more forward-looking analysis, okay? But coming into today's session, right, I'm saying, okay, we do have this swing high here. So as long as we see bullish signatures hold, I want to just assume we're going to continue to meet premium or buy side objectives. So look at the left of the curve when we dumped here. This swing high, right? We want to see price go there and there's something I'm waiting for to give me a little more confidence that that will occur. Okay. And if it goes there, we don't want to see it just one ticket and reverse lower, right? We want to see a deep stop hunt through that high. And by extension, where is it going to reach for? This untapped bearish fair value gap, or SIBI, right above that liquidity pool. So I'm looking at this as a high probability buy side liquidity pool. The swing high from July 23rd, okay, at 20,084.75, and that's SIBI above from that displacement on July 17th. Okay, so does that mean me as a trader, you as a trader, you identify these liquidity pools and then just buy? No, you have to wait for a time and price to align. You have to wait for the opportunity to present itself. Okay, so like I mentioned at the start of the call, if you guys joined late, coming into today's session, because I'm waiting for after 9:30 open, I wanted to see an opportunity to go long. Okay, and let's kind of move through markets here, or time frames, excuse me. This is that daily buy side liquidity pool that we're trying to determine if we can get up to, right? To start the week off, came down into this BISI, breakaway gap, signature of strength, and we expanded higher. Okay, not much. Let me just real quick. Not much I want to really mention on the 4-hour chart. The read that was pretty confident today was on the 15-minute, right? So our pre-market analysis, our pre-market routine, we and I am going through and looking to refine the dealing range as I move through the lower time frames, right? Going top down, right? So on the daily chart, we discussed this early in the week for the entirety of the group and this morning, and really in every call so far in RTO. But if we're looking for buy side targets to continue to be met, obviously, is it optimal? Is it ideal for price to come all the way back down to a discount of this daily dealing range, right? This swing low, and I guess you could even do this right here, right? Is it optimal to come all the way down here before reaching just a little higher up for that? No, of course. So that is the value, right? And the reason that we utilize refined dealing ranges, right? So I'm looking on the lower time frames, first in the 4-hour, after the daily, can I refine it, right? And today we could, and we discussed that. I won't harp on it here, but that's what I'm doing as I go through the lower time frames every morning during the market. Okay, so here, this is a kind of where we get the clear picture. So let me even do this, right? Come back into where we were this morning before 9:30 open. Okay, so expansion, consolidation, we engineer these relative equal lows above discount inefficiencies, but still, I'm looking to see if I can refine this dealing range. Now, this is what we are utilizing, and we're utilizing for the hourly chart coming into today. But just like what I described on the daily chart, where we don't really want to see price dump so aggressively if we're looking for a move and upon the opening range after 9:30 open, right? We don't want to see it come all the way down here on the daily chart, and applying that same logic, right? We really don't want to see it come all the way down, right? Price was around here before it, and here you can see it swept these lows, but it was right around the lows right before it purged it, London low, and then this swing low from last night at 9 p.m. Eastern time. This is around what, 19,000, we'll just call it 850-ish, right? You really don't want to see it drop almost 200 points all the way down here just to get a quick push up, right? Can that happen? Of course. But what is the purpose of me saying this? I want to continue to my 15-minute chart to see if I can refine a dealing range with any swing lows from this expansion leg. Looking at this hourly chart and this hourly dealing range, you don't see any hourly swing lows that I can reasonably say, okay, this is a refined dealing range low, right? Number one, is there a sweep of liquidity and then a swing low formed before that expansion higher? No. Number two, is there any algorithmic signature from this expansion leg higher that I can refine, okay, the dealing range low to that swing low that delivered to that inefficiency and provided that algorithmic signature? No. So what am I going to do? Just continue to the 15-minute chart to see if I can get a picture. So now this looks like a mess, but this is what we were looking for in the morning. And let me do this as well. So I think we were on like right around here today, right, when we were going through markets preparing for 9:30 open. Okay, so real quick, if I copy that, I guess I don't have to copy it, right? If we're using the same, this is the 15-minute chart, if we're using the same dealing range as the 1 hour, right, that's right there. Okay, so someone tell me and RTO guys, you guys can probably help out. Why did I refine and describe this morning? Why do we want to refine our swing low to this swing low here? And I'll zoom in. Right, this swing low right here at 3 p.m. Eastern time yesterday. Right, was there a liquidity sweep? Looking at this 15-minute chart, no. Why did I refine this dealing range low here? Someone tell me. Because it did what? What is this? Right, it tapped into this inefficiency, which is an algorithmic signature, right? By extension, okay? By this tapping to this upper BISI and expanding higher, what are these? What am I about to label these inefficiencies below, guys? What are these inefficiencies down here? Did price reach them? What are these two purple fair value gaps? How can we classify those? Right, those are breakaway gaps, right? Price is not reaching there, and that is an algorithmic signature, right? Price is failing to get there. It's only delivering to this uppermost fair value gap, right? So if I see a swing low when we are bullish, right, even though we didn't sweep liquidity here before expanding higher again, since this is an algorithmic signature, I'm going to refine this for my 15-minute dealing range, okay? Because I want to see that swing low hold strong and not get delivered to until another buy side objective is met, right? Why? Because that's telling me the market's remaining strong, failing to reach for these inefficiencies. Okay, so that is the logic behind why we refined that to here. Okay, again, if you're looking at your own charts, 3 p.m. Eastern time, 15-minute swing low. This is NASDAQ September contract. Okay, so that's my dealing range low to the high, which was formed during London today. Okay, and I'm going to extend it out to the right, just so we're clear. All right, and now, right, so just before I continue with this 15-minute chart, as long as this refined dealing range and a refined dealing range in general as a rule of thumb supports price, that is a signature of strength. And this is what I discussed on the YouTube channel in the dealing range video. If you had not checked that out yet, I highly recommend you do. This logic that occurred today is literally the logic I apply and what I talked about in that video. That's probably maybe, I don't know, 6 to 12 months ago, I forget. But as long as this lower time frame or refined dealing range supports price, you're going to assume that hourly inefficiencies in the larger discount of the larger refined dealing range are going to remain as breakaway gaps. And that's what you want to see for signatures of strength. Now, does that mean if this 15-minute dealing range was to fail, okay, that we just automatically go out to the 4-hour or daily chart and assume we're coming all the way down here? No, obviously, right? This is all about building a narrative and gauging strength and or weakness if we are bearish. Okay, but to continue forward with the 15-minute chart, we've established our 15-minute dealing range, right? Refined dealing range, okay? Like I said, and like you guys know, I am a New York trader, right? Preferably in the AM session. So I'm looking at every day, but especially today, what occurred during London, okay? So this here, let me just get this labeled. This was London low. Okay, and this swing low from 9 p.m. Eastern time last night, okay, that's relative to a session low. So these are two session lows. This is Asia, okay, this is London. Session lows in and of itself we know are strong draws on liquidity. Okay, price is going to want to gravitate towards there. Now, why am I even more confident that price is going to reach down for this swing low and, of course, by extension, London low? Someone tell me. We discussed it here tonight, and we discussed this in more depth this morning, right? Why am I classifying this at 19,845 even as engineered sell-side liquidity? It's residing right above what? right here. Right. Equilibrium of this refined dealing range. See how before, and this is the cool part about ICT concepts and just the market being an algorithm. See how before this London high was made. So before this refined dealing range that we're talking about was actually formed and we started to retrace, see how this swing low came right above equilibrium of this refined dealing range? Okay, that gives me confidence that price is going to return there. On top of the fact that we have a London low or another session low right above that, right above Asia low and right above equilibrium of the dealing range. So there's multiple reasons for price to come down here. You should have high confidence, right? You're building your narrative that price is going to want to come down here. Now, all this being said, we're trying to determine, right? And we're really just trying to favor the trend, okay, for the highest probability setups, which has been bullish delivery. Okay, we just smashed the first target for the week. Now we're trying to see if we're going to reach up to the top of the Sibi and really this swing high here at 20,084.75. So by other words, or in other words, excuse me, we want to see if we can get a long setup, right? So am I involving myself in this move lower? No. But if I trade London, this logic that I just discussed, I would be completely open to looking for shorts there, playing against the higher time frame trend, because I know there has to be lower time frame, and write this down. There has to be lower time frame manipulation, and that needs to be completed for higher time frame order flow to continue. Okay, I'll say that again. There has to be lower time frame manipulation for higher time frame order flow to continue. Okay. So again, understanding that manipulation has to occur, especially when we can spot multiple session lows here, discount or equilibrium of the refined dealing range, and of course, what Sal said, this discount inefficiency right here, this 15-minute BISI that we have yet to deliver to, right? So this is just textbook, right? Especially that's purged, I believe, a little before 9, we'll see, but leading into New York Open, right? The retail trap is that there's double bottom here, right? Strong support, whatever, right? And now this is resistance, okay? And this, they should be chasing shorts as soon as the market opens, right? You can attack that retail logic, understanding manipulation, right? So what do you want to see price do? And what did we discuss this morning? You want to see price go to and through these engineered lows to discount and reach for this inefficiency here, and then we see if we can bounce here. Okay, now how do you want to see price deliver in relation to this 15-minute BISI? Okay, and I almost sniped this. I was one quadrant off, but the logic is still there, right? You want to run your quadrants off this. So obviously 75%, 50%, and 25%. I'm just going to reverse this so we're all clear. Okay, so you see the upper quadrant is here, right? So before the market today, we're saying, okay, for a long setup, we want to see manipulation running on these lows into a discount of the refined dealing range and delivery to this 15-minute BISI. But how do we want to see price act in relation to this 15-minute fair value gap? Do you want to see it go all the way down to the bottom? No. You want to see it come to, and this is what would have been nice, it's still a good setup regardless, just looking at the 15-minute structure. You want to see it come off of one of these quadrants, 25%, right? And it happened to, I believe, bounce off 50%, right? And then reverse higher, okay? And by extension, if it bounces off of one of those quadrants before reaching the low, that is it's still classified as a breakaway gap, right? Because the market and the algorithm is showing you it doesn't want to reach for the low of it, right? It's in a hurry to get somewhere, right? It's only coming down to take out these lows here and come down to a short term or the refined dealing range discount for smart money to get involved. Okay, is everyone good? Everyone following along? Okay, so even just talking about this, and before actually I was gonna just fast forward the market, what occurred here, but what did we talk about this morning in relation to all of these highs here? Potential what? RTO, guys, what do we talk about? Right, Matt. Low resistance liquidity run. So LR. I'm sure you guys have seen that annotation and know what that stands for, but if you're new, it's just low resistance liquidity run. And that's essentially just speed, explosiveness, right? Quick delivery, right? And why is this low resistance liquidity run? Because if we're looking at this structure, right? If we start to see the signs of a reversal down here after the manipulation that we have discussed and we're preparing for this morning takes place, right? We want to see can the market reach up for London high, right? Which I know today on NASDAQ it did not, on ES it did, and we're going to get to that, okay? But we're trying to say and build reasons after we just spot the smart money reversal signatures back to buy side. We want to see as much engineered buy side liquidity here, session highs, right? Relative equal highs exactly on the lower time frames, right? But this type of delivery, okay, we already delivered to this inefficiency, but look at, like, I'll describe it like this. From this swing high at 515 to this last candle here, okay, and let's see if, I think we expanded lower on the next candle. Yeah, we did. Okay, so like this structure here, if we do see that reversal, is the market just going to come up and run one of these highs? No, it's just going to want to rip through all of those highs with speed and stop everyone, all the shorts out, right? Because all the shorts who were chasing below this low and were looking for a continuation, whether they were in profit up here, okay, or they entered after this break of the lows, where are they going to put their stop loss? Below these above these highs. So the market's going to want to rip above all of them. So potential for a low resistance liquidity run. So what have we discussed with that and everything prior to that in this call today and in the pre-market call today, before the market, right? We're building a narrative for a long setup, for bullish delivery, okay? Then we just have to wait for opportunity, right? And then what is depicted on this chart here, okay? The best buys come below what? It's on my chart. Let me make sure you guys are paying attention. Right, midnight open. Okay, so everything's checking out for your narrative here as you come into 9:30 opening price, or 9:30 open. Okay, so let's continue. Okay, and look at this price. So again, if you guys joined late, welcome. I am recording this if you guys want to review this. Okay, there's actually a lot of good takeaways just based on what we discussed there. And really, let me actually go back and just fast forward to current market price. So we come down, okay, so we failed to get to 50% of that. So what did we discuss, right, today and pre-market? That's best case for a long delivery. This is remaining as a breakaway gap, a signature of strength, right? It's failing to even reach 50%, and we're bouncing off of it after manipulation in a discount of the refined dealing range. Okay, now what was, let me see this. Okay, obviously the aggressive dump down. Okay, if we were going to, just looking at this 15-minute chart, continue higher, we wanted to see this act as a high probability bullish inversion. We'll talk about some of the structure and the turning point at the highs on the 1-minute chart and why this was problematic. Okay, you guys know, I'm sure if you watch the markets today, ES got that. So we have this SMT at the highs in relation to London. Okay, but see how it just zoomed off real quick and stopped out all the shorts who had their stop losses here. Low resistance liquidity run. Okay, let's go to this now, right? And I'll actually, before I talk about the reversal, okay, this is probably random. We'll talk about that. Okay, looking at the 1-minute chart again, all of these highs are just way too clean. Look at this delivery here, right? It's the same as the 15-minute chart, but just depicted on the 1. This is what you want to look for potential low resistance liquidity run. This type of structure, just a bunch of highs here, okay? So upon 9:30 open, right? I've already mentioned the analysis we discussed this morning, right? I'm waiting for my opportunity to present itself now. Something that I can clearly frame risk, something that makes sense to me, right? A high probability setup, something that I can deem as such, right? So we're below midnight opening price, okay? and 9:30 open happens right here. So what did I want to see? If I'm looking for a clean setup to target longs, okay, on the market, do I want to see the market right away from 9:30 to 9:34 run around 40 points, 50 points? No, I don't want to see that. I want to see that manipulation below 9:30 opening price. Okay, so in hindsight, could I have longed this new day opening gap? And this is what I talked about at the start of the call, right? Reading this order flow, as we expand higher, even here, I'm saying, okay, we're probably not going to return to the 9:30 fair value gap, right? We're above the new day opening gap. This thing's probably just going to expand higher without me, right? And that's fine. I'm not freaking out, right? So in hindsight, right, if I was to buy on this expansion higher as like a break above highs trade, it would have worked out, right? But that logic is not what I want to depend on day in and day out in my trading, right? It's not repeatable, right? There will be days where I could say, okay, this expanded higher right here. I'm afraid I'm going to miss the move. So I'm just going to long this new day opening gap. And then it comes down, stops me out at discount, and then continues higher, right? So I'm greedy, not with my profit taking, not with, how many trades, taking 1 million trades during the market. I'm greedy with what I demand for a setup, right? The analysis, and it's not negating the fact of how important it is. It's only one part of it. The opportunity still has to present itself, right? So I wanted to see manipulation below 9:30 open. Again, as you can see, right at 9:30, we just ripped higher, right? So we're coming up here. We close above the new day opening gap. That's ideal. It's a significant inefficiency similar to the new week opening gap, a 9:30 fair value gap, a balanced price range, a news fair value gap, right? I'll have a teaching on that coming soon, okay? But we're delivering above that and closing above that new day opening gap. And there I'm saying, yeah, we're probably just going to rip, but I don't feel comfortable buying up here, okay? And that's fine, okay? And then again, as we expand higher, we enter the 950 macro opening price. Okay, we do come down real quick, but expand higher, right? So again, we're running without me, right? And this is fine. All of these highs, right? We're running all of these highs. I don't want to long after a bunch of buy side liquidity has been taken. So after this, I'm just saying, okay, I think it's a day I'm not going to at least long, right? I'm going to wait for a long opportunity. Now I'm going to talk about what was problematic for NASDAQ reaching London high, right? So the framework of it is, obviously we have the SMT where we'll look at ES. Let me do this. Okay. Where ES got this high here, its respective London high. Okay, so we're seeing that session SMT. So if I am correct about this statement, let me just double check before I say it on the S&P. 957, 958. Yeah, okay. So there's no lower time frame SMT looking at this structure, but we still have the higher time frame session SMT in relation to London high. Okay, so let me bring back Discord. Right, so we can talk about this, right? And this is kind of how you stay fluid and realize that the market is potentially turning, right? We're above what? Midnight opening price, 9:30 opening price, the new day opening gap, right? We start to see a potential session high S&P in relation to London high. And right after we create the swing high, what do? Close below these two consecutive up close candles, okay? After a session SMT. And what is even more significant about this? When is that occurring? Someone tell me. Right. During the macro, the 950 macro. Right. So you're using these same tools, midnight opening price and macro opening price now, and saying we're above macro open. These are where the best shorts come into play. Okay. So what do we see here? Number one, the two up close candles. We close below, validating them as a macro CISD, right? Bearish order block. We see this upper inversion fail. Okay. Or really what it is a failed bullish fair value gap, and it becomes an inversion, just to be specific about that terminology, right? And then, and this should not be labeled this should be SIBI, right? Okay, we expand lower and get below this here. Someone tell me why this is a high probability macro bearish inversion. Yes, this will be uploaded, Cheryl. That was your short. Awesome, Hades. Right, Andre, we're just building narratives. Right, it was initially this bullish fair value gap, utilized to send price higher, form the SMT, close below it, right? That's a high probability bearish inversion, right? I think we discussed this yesterday. We discussed it in calls before, and I tweeted this out a while ago, right? Price failing to reach an inversion, just like any other form of breakaway gap, right? A normal, let's say in this case, if we were bearish, a bearish fair value gap or a SIBI is a signature of strength. The fact that this upper macro inversion, I'll change the color, I'll make it a little darker, is being failed to deliver to is another signature of strength. The same way we look at a breakaway gap, right? And how can we understand that that is high probability to not reach there before expanding lower, before we expand away from it? It's the fact that we close below this lower high probability bearish inversion. So anything above it you want to see remain not delivered to. On top of that, you have the SIBI passing through. Okay, so see how you can switch your narrative and start to see a higher time frame SMT form from a lower time frame turning point. Macro signatures above macro opening price. Okay, above midnight opening price, above 9:30 opening price, above the new day opening gap. Okay, so let's say, what's the entry here? This here. And your stop, right? If this is good for your risk, the rule of thumb is just to swing high above. But what did I already mention with this macro bearish inversion? We want to see it be a breakaway gap. So you can trail your stop down to here, right? Or even if you want to be safe, right? Just put it right above CE, right? Because obviously we want to see this remain untouched, okay? And if price comes up to this consequent encroachment or 50% of this, okay, you're probably wrong. It's probably going to expand to the high, close above this bearish fair value gap, and send us to the highs again. Okay. Yeah, Matt, and that's perfectly fine. The thing, if we closed above this SIBI, this would have been a smacker of a macro long, right? But we expanded lower, right? And even just how the body acted in relation to this high probability bearish inversion. But yeah, Sal, so when price came back up into this, the low of this BISI, right, the one that formed at 954, closed below, we classify it as a high probability bearish macro inversion, right? And on top of all the things that we said before, to build this narrative, okay, and understanding that ES took London high, okay, and NASDAQ did not. So we're seeing a higher time frame SMT, a session SMT being confirmed with the lower time frame signatures. Okay. If you're in that short there, what do you want to target? Of course, you can target these swing lows, but we have these lows here. Okay. Right. Internal here. You can target a discount of this range, which is really what we should be doing. I should be putting this on here. Right, you can target discount of this in the first swing low here, right? And really what you want to see as we come lower, what do you want to see us do? Do you want to see us bounce off the new day opening gap and fail to close below? No, you want to see us smash through there and close below. And when we do, you want to see it act as resistance, right? What is this high here? 19.85.350. What's the new day opening gap low exactly? 19.85.350. Okay, and it delivers us to the lows. Okay, so the macro signatures are just so powerful, a macro power of 3 in general, right? But if you can just identify these turning points and start to see them day in and day out, right? All you need is discipline and patience. Okay, that's literally all you need, and not to go on tilt after a loss, because of course there's going to be a setup regardless of what strategy you take. Whatever you're utilizing in terms of just patterns to enter a trade and execute on a setup, there's going to be times where it looks A plus and it just fails, right? And your job as a trader and your graduation to the next level is just not freaking out and understanding that it's just a small loss, right? In the large sample size that is your trading career. Okay, that is literally what separates, I don't want to say you from other traders, because it's just you versus you. So that's what's separating you from getting to the next level and being consistent day in and day out. Now, consistency in trading is not 100% win rate. You're making 6 figures every single day, right? It's about making the correct decision over and over again. All right, so let's continue forward here. And like I said at the start of the call, if you guys joined late, I haven't really looked in depth at this structure here. I did, right before I got on, see this here, which I believe was beautiful if I saw this correctly. And I did see it correctly. So let's review this as well, right? Let's delete this up here, right? But let's remember, we're seeing bearish order flow, right? And going back to the 15-minute chart, this should have been a high probability bullish inversion, and we showed literally no signs to find support there after the SMT. Okay, after going above minute opening price, running the internal highs, right, and then the external high on NASDAQ fails to get purged, that's your SMT. All right, so after you see that turning point that we discussed up to this point in this call, you should favor shorts, right, until you see those bearish signatures start to fail to act as resistance, right? So we come down and we do get that low right before 9:30 open, right? And again, if you caught, just a note on this, if you caught some of this move up and or this aggressive move down, I tweeted this today too, like you're doing yourself, it's so much more freeing, I'll say, to just walk away from the laptop, walk away from the charts after you've made your money and being content with enough, right? The more time you enter a trade, the more margin for error you are allowing into your trading, right, into your account. Okay, and especially after we see here like this, like we see that aggressive dump all the way down here, and we see a lot of this sell side liquidity here get ran, right? Once we run liquidity on both sides, it is harder, and that's not impossible, right? Focus on the vocabulary or the terminology I'm using. It's not impossible, but it is more difficult to really find your footing, okay, because multiple liquidity pools have been taken out. Okay, so after this expansion lower, in and of itself, you really, if you're not in a trade, if you're not still, holding a runner or managing a position, you want to wait for more structure if you are even going to sit at the charts. But just being able to walk away after a move, right, after you've got your piece, is so freeing, right? Lock in that green day, lock in that profit, and walk away. Okay, we will review this. Okay, so we see this expansion lower, right? And this is what I just discussed in terms of just waiting for more information, right? So we discuss here, and let's talk about this first. What is still important to us, right? This is a 1-minute chart, and it's so easy to get lost in all of this, right? And that's why we talk about day in and day out and pre-market calls, reviews, my trade reviews, whatever. We can get precise entries for our trades. We can get a great idea of what the market is doing looking at the 1-minute chart, but we need to know what inefficiencies and levels are important to us and not take the bait on every single fluctuation, right? That's how you blow accounts. But if you know how to read order flow in the 1-minute chart, it is beautiful, and you literally just have to be patient, okay? So again, after we see this move down, right, what I want to frame here is with logic, okay? How we could have played these relative equal lows, or played a short down to these relative equal lows, excuse me. So essentially you want to see these engineered lows there, right? And of course we have these internal as well they're both internal, but just these this more conservative target remain true, right? If you're bearish, you just want to see as much engineered sell side liquidity get left before getting your short set up, right? To convince everyone that it's strong support and to put their stop losses below those lows, or in other words, build liquidity. Okay, the algorithm is going to seek that liquidity. So whenever we have this expansion, and this is the same logic that we've discussed in RTO with the intraday continuation, right? So even if we get a low of day or external range sell side liquidity, right, you really just want to run the range for the intraday session. So from this high to this low, understand where premium is, okay, and then look for any significant inefficiencies in that premium when you are bearish, okay? And this was just, even the more I look at it right now, it was just beautiful. So this is our range here. The market's going to want to do what? I kind of want to open another. I want to clean this up a little bit as much as I can. Now we can leave this how it is. Okay, so the market's going to want to go up to a premium, right, which is this line here. So this is really equilibrium. So everything above it is a premium. Okay, so we want to, how do we use that information? We want to be able to look to the left on this sell-off here and identify buy-side liquidity that the market could want to run for and significant inefficiencies, right? So what do we have? We have a swing high here, we have a swing high here, we have a swing high here, right? Now what does the market do right here, right? And I actually want to take this off my chart, right? The market pushes up and runs all of these real quick, right? So this is the same logic for low resistance liquidity that we discussed to start this call, right? When we initially pushed up to buy side upon 9:30 open. We have these swing highs in close proximity, right? So the market's just going to want to run all of those here, right? For this example, to keep the review as organized as possible, right? What are we doing? What are we seeing the algorithm do? Leave engineered lows, engineered relative sell side liquidity, right? Reach up into a premium of the intraday range, run liquidity, and do what? Where did the algorithm stop and turn here? Someone tell me. It's a test to see if you guys are paying attention. What is significant in a premium of this range? Right, the new day opening gap. Right, so the luxury of this, if you're waiting for a short, you're just waiting to see does price reach up here, right? So your significant inefficiency. And today's structure, the 9:30 fair value gap was down here, right? If it was up here, if this was a new day opening gap today, or new week opening gap, or 9:30 fair value gap, or news fair value gap, I'm utilizing the logic the same way, right? The beauty of reading price this way is that, let's say I'm waiting for a short and price just, instead of just blindly shorting one of these, right? If price just continued higher, right, there's no harm, no foul. I just wait for a clear setup, right? But if I see the reaction and the bearish signatures off of this significant inefficiency, again, in this case, it's a new day opening gap today, then I just use my entry models. Okay, so price comes up here, right? And what's significant about, on top of the fact that it's a new day opening gap, man, this stuff is just so beautiful, right? And I hope this stuff just inspires you guys to be patient and wait for clear setups like this, right? You don't have to take the bait on every shitty setup that comes up. Right, Raven. It's occurring during the macro. So you're seeing what? Time meet price. Okay, time is of course the macro. Price is referring to that significant inefficiency, the new day opening gap. And look at here, tap into it once, twice, 3 times. Does the body go above it? No. Does it even go above CE? No. Does it even close within the new day opening gap? No. Okay, let me actually check one thing on ES. I don't think we had an SMT, but if we did, that would have been A+++. No, we didn't. Okay, and ES was even So, right, ES I just discussed. NASDAQ here was referring to the new day opening gap. ES during the same time was referring to its 930 fair value gap, just beautifully, guys. It was also actually within the new day opening gap, right? And that's a conversation we can have when they're coupled together, right? But the point is we're referring to these significant areas in price during the time of the day where we look for this type of delivery, right? And after we see the bodies respect this, what are we waiting for? What's the final thing? You're waiting for the change in the state of delivery, okay? You're waiting for this here. What am I going to label this BISI here? Right, it's an inversion. But more importantly, it is a macro inversion. Okay, so here, what is the trade? Okay, number one, stop loss. You don't want to see this swing high get purged, obviously. I already mentioned multiple times in this call and in previous calls. You want to see an algorithmic signature hold and not be delivered to until your objective, whatever you're targeting, in this case we're bearish, whatever you're targeting is met, right? But even this, you don't want to see it get above this last swing high, right? You want to see this macro inversion support price lower, right? So that can be your stop, and this can be your trade, right? So what can be a partial here? When can we move stop to even, right? If you want to take a partial here, okay, because you're understanding we're at the 930 fair value gap, I would be looking at this range, the last expansion leg higher, and just looking at the first liquidity and or inefficiency in the discount of that range, right? So where's that? This BISI here, and see how this swing low is right exactly at the high of that BISI, 19,817. That would be first partial. Now, in this case, just kind of coincidence, two things are being completed that are important to us, right? That's a partial there, okay? But what else occurs right here with this doji looking candles close? That's important to us. Right, close below that 930 fair value gap. So think of the 930 fair value gap as a roadblock. Whenever we close below, and I was gonna save this for a future teaching, I'll just say it now because it's beautiful. If you have your entry here and you have a significant inefficiency in the way, whenever we close below that significant inefficiency, if your terminus isn't met, move your stop to even, right? So if this is your trade, and you're aiming for these lows, or let's say even more conservative, these lows here, you have a partial there, or if you just have one contract, right, and you're trying to get the full pull, and that's something you're trying to work on, right, you can reasonably say, after we close below, right, and this box isn't really going to do it justice what I'm trying to depict. You're moving your stop loss from this high, where we initially had it, down to even. Because of course, the 930 fair value gap, we want to see that for efficient bearish delivery. You want to see that push price lower, right? So that's by extension, you don't want to see price return all the way back up here to the macro inversion, right? So are there going to be times where me personally and that you and just price in general, price will close below the 930 fair value gap, right? I'll move my stop to even, take a partial, and then it'll come back up and stop me at break even? Yeah, plenty of times. And that is trading. And you have to be unemotional and indifferent to when that occurs, right? But the times when it does what it did today, right, and you're comfortable about risk being removed, and then you also see it deliver beautifully and push price lower and act as resistance, right, down to your targets, then you're going to really start trusting yourself, right? And then you're also, by extension, I mentioned earlier today and in previous calls recently, you're not going to be in a rush to take those low probability setups. Just take the bait on everything, right? Just take random moves because there's volatility in the market right at 930 open or whenever, right? You're going to be greedy and demand beautiful signatures in price, right? Now, will there be times where you want it to be so perfect? Of course, right? It's part of your experience, your learning, right? But over time, you're going to see how great these setups can be. And then I've talked about it multiple times now. You just have to control yourself and manage risk and not freak out after a loss. That's literally it. But this type of delivery here, right? Look at the price respect the 930 fair value gap, right? So see how on the 1 minute chart, right? Right at 930, right? We have this first fair value gap formed, right? We need to know what we're looking for, right? So if I was in and this used to frustrate the hell out of me, right? When I was first starting off. If I had the bias right, I see these relative equal lows, and I'm just waiting for this here, right? A lot of traders and I'm not even attacking anyone, but you're either just waiting for a bearish fair value gap, or let's say you're like, okay, this is a potential like second stage redistribution lower, right? They're looking at the 1 minute chart and they're going to miss this entry, right? There'll be times where it wicks up into this, but there's also going to be times where it does not reach up into it, right? You need to know what to look for. So where's my priority? Where's my emphasis on? Is it on this random 1 minute fair value gap here? No, it's all the way back from the first fair value gap that formed at 930. That's important to me. Okay, so the entry, if I was waiting as this for an entry or where I move my stop to even, like we already discussed, the emphasis is on the 930 fair value gap. Now that being said, right, what do I want to see? And this is how I would utilize this SIBI. What am I going to label this? Best case, we want to see this remain as someone tell me. Right, Jordan. As a breakaway gap, right? Because it's the 930 fair value gap. You want to see signatures of weakness, right? We've already spent a lot of time in it. There should be no reason to, say it needs to be balanced or use that type of logic, that type of framework, right? You want to see speed off of this. You want to see signatures of strength, right? Now, do we consolidate a bit here? Yes, right? But look at the signatures. We try to deliver to it once, twice, 3 times, 4 times, 5 times. Okay, and just like the new day opening gap, look at the bodies there. Look at the bodies here. Okay, then we start to expand away. Right. Another thing is that, like, we already discussed that after we close below the 930 fair value gap, if we're assuming that we're short off this macro inversion, you move your stop to even. You don't want to be in a rush to, get scared and trail your stop loss super tight after things like this, right? If you see this SIBI and then this close above, you don't want to automatically say, shit, I'm going to get stopped. I don't want to lose out on however many points or whatever, right? You can still start to trail, right? But the emphasis still remains on the 930 fair value gap. That's your line in the sand, if you will, right? That's your measuring stick. And we use that terminology a lot, right? When we look at price, right? So as long as how do I utilize that in narrative? As long as we remain below the 930 fair value gap, you should expect sell side objectives to be met. What sell side objectives have we already established and been talking about this whole time? Clear as day, relative equal lows, right? So to summarize and reiterate here, for intraday continuation, right, you just run the whole leg, find your discount, find your premium. If we're bearish, you look for liquidity pools above equilibrium in the premium of that intraday range and significant inefficiencies in there. And now what I did not discuss, I don't really want to take these annotations off because it's beautiful. By this, or with these signatures, with this turning point here, by extension of that logic that we already discussed, what is this here again? What is this here? This fair value gap classified as? Right, breakaway. So again, it's just signatures of weakness. So you guys see how there's so much, and really we've only talked about NASDAQ, right? This is a 1 minute chart and you just have to know what to look for. So again, right, we can get lost at, and this is what a lot of traders in general with ICT are, especially when you're just starting off, and I was there too, right? You're on the 1 minute chart because you want to get involved, right? You want to, feel good. You want to get excited. You want to be in a trade. You've done so much studying over the weekend. You've charted, et cetera, et cetera. You're coming off a winning day. You're feeling confident. And then on the 1 minute chart, you just see a little displacement and you take the bait, right? You try to long this, right? Or, right, you think this is an important inversion here, right? After running these lows, right? The emphasis is above to the 930 fair value gap. So we need to know what to look for. Okay. And I guess Let me just open a new template. Let's look at the S&P real quick. Okay, so I won't really talk about this turning point up here. It was similar to NASDAQ. I want to talk about the 930 fair value gap here. I want to extend this right. Actually, I don't, because I want to get it labeled throughout the day. Like ES is just, look at this, guys. You think this is right on Q Flacco. Think this is all random? After we close below, that's the line in the sand. If you want to see the market remain weak, you want to see price remain under that. And if it returns to it, you want to see it respect it in terms of resistance. So you see your 930 fair value gap. Whoops. The 930 minute chart. Maybe I just accidentally unlocked Enigma. Okay, and there's one, oh yeah, the new day opening gap. I have that on my other template, so I'll just copy and paste it. One sec, copy the low, paste. Okay, and we already discussed this turning point for the intraday trend continuation setup, strategy, logic, whatever you want to call it, on NASDAQ. But ES, like, if you guys can just master this here, you guys are golden. Like, you're golden, right? So we're seeing, again, let's say you prefer to trade ES. You still want to look at NASDAQ, right? And you still want to understand that on NASDAQ, we still have these equal lows here, right? So we're seeing clear sell side liquidity on NASDAQ. On ES, it wasn't as clear, right? Essentially, for this turning point, we just have low of day. Just looking at the 1 minute chart. I'm not really going to look at the higher time frame right now, right? I just want to look at the turning point on the S&P, right? But you're saying, okay, I can see ES revisiting low of day because of the analysis I'm utilizing and what I see on NASDAQ, okay? So I didn't even mention above on NASDAQ. What else is important about the 1150 macro? We go aggressively above macro opening price. Okay. And we're also returning above what? 930 open. So the same thing here. Let's frame this. Right. And if you were to, and you guys should still be doing this on your own, because this is how you make your progress, right? Charting wise, and just journaling your, your thought process and emotions throughout the day, whether you are in a trade or not. If you, whatever situation you find yourself in, if you wanted to take a setup and you didn't, you hesitated for some reason, you have to deem that, okay, it was a good for me to sit in my hands because it didn't make sense to me, or did I hesitate because I was scared or something, right? You don't want to operate in fear by any means. But like if I was doing my own journal process right now and wasn't on review with you guys, I would just be marking up these charts and then just writing my annotations. Of course, like the 1150 macro, 930 fair value gap, but like little things like here, like saw, and this is very surface level. Obviously, you want to go more than this, but I just want to touch on this super quick, right? You would say this turning point, and you would describe all the signatures here, right? And why you took the trade, or why you didn't take the trade, or why you just wanted to tape read it, right? Whatever you saw, this is how I would be doing my journaling. And then you could either put a folder out on Notion or Google or something, or just print it out and have a binder, right? For me personally, especially when I was starting, I preferred to actually print it out. It felt more, real. I put more effort into it. Okay, but this is what you guys want to be doing with your journaling sessions, right? Your review. Okay, so again, we're just understanding during a macro what is significant. Let me mark this here. You have macro opening price here. Price expands above that time level, as well as, did it get back up to 930 opening price or no? Yeah, it did. 930 opening price is right here. okay, above macro opening price, 9:30 opening price to the new day opening gap and the 9:30 fair value gap. Okay, and again, we just see price respect this. Okay, it's referring to premium inefficiencies above macro opening price, but it's running liquidity, right? It's running all this liquidity here. Okay, and that's what you want to see, right? So when you see these significant inefficiencies or, right, higher time frame levels getting worked during a macro, and then you see the lower time frame turning points, that is all you need, guys. It's literally all you need. Okay, so like this, right, to play devil's advocate. If you want to be aggressive with it and take this macro inversion after you see, right, the same logic we discussed on NASDAQ, you know, delivery to this new day opening gap, this swing high formed at 1201. Okay, and then right after we close below this uppermost BISI here, that's fine, right? It is more aggressive, right? Especially when we have consecutive. Okay, this could be your trade, but if you're entering there, where's the swing high above? Right here, right? So you would have got had a little drawdown, but after we reclaim this, and just let me label this. We talk about this often in streams, right? We close below this one, this inversion. Okay, we close slightly, just for a second, back above it. Now, you still have the 9:30 fair value gap and the new day opening gap high. And if you see this dashed, lightly dashed line here, made it a little dark. I'll make it this blue line. That's 50% or CE of the new day opening gap. And you can see here the close on this candle of 56.2750, right? Look on the right side there. That exact level is closing and respecting CE of the new day opening gap and the 9:30 fair value gap to the tick, right? So of course, you don't want to see price return here, best case, right? So why did it come back and close 5627? A tick above the macro bearish inversion? I don't know. But what I do know is after it reclaims and goes back below there, you want to see it deliver with speed to sell side, right? You don't want to see it get back above there because A, you're probably wrong, and B, the significance about this BISI that you're placing on it for an entry is probably incorrect, right? So when that occurs, I'll just remove it from my chart. But in this case, that was not the case. So we did see after we reclaimed that, we delivered once and twice to the exact low and just expanded lower. Okay, so again, there's opportunities today. And we're just waiting for those opportunities every day, right? We're not switching the signatures that we look for in price. We're not, you know, freaking out when there's not an opportunity. I'm also understanding that today and yesterday, there was good price action and volatility, okay? And that doesn't mean you get overzealous, or if you took a loss today or something, you get freaked out and go on tilt and try to make it all back tomorrow. Every day is just a clean slate. It's a clean opportunity. So this was a good little review session. There was a lot of things I deemed valuable that I wanted to discuss, and we could even just continue to go into this market for the longest time every day and just talk about it for hours and hours on end. But make sure you guys as well are doing your own due diligence and going into your charts, right? ICT says this as well. You want to see this stuff for yourself, right? You want to go and see this with your own eyes and say, wow, I really see this 9:30 fair value gap support or acting as resistance here. I really see the new day opening gap being worked during that macro. I really see, you know, high probability order blocks or macro inversions or higher time frame SMTs, etc., etc. You want to go into your charts and see that, okay? And then when you miss those, right? I miss signatures all the time, right? I miss setups all the time, right? But my job is to do what? Not freak out and just review it. And the more you review, the more you get those reps in, the less likely you are going to miss those when the next high probability opportunity comes, right? A lot of you guys, and I've been saying this in almost every call recently, right? Because it is the most important thing, right? In this Discord, a lot of you guys I recognize in RTO or just the entirety of the total Discord. We've been talking about virtually the similar signatures in price for a while now, right? And if you're still struggling, you need to wait for turning points like this, okay? And just not freak out after a loss, right? You guys are so much closer to consistency and profitability than you think. You just have to do the work on yourself, right? And really, if you're struggling with impulsive trading, over trading, the win isn't a profitable outcome. It's not making money. It's about resisting that temptation when you get into, the 9:30 market opens and you're saying, damn, here we go again. The market's volatile. It's 9:32. How am I in a trade again with 5 contracts, 5 minis? How did I do this? Right? All of a sudden, it's so easy to press a button. All of a sudden, you're in a trade. Okay? You need to view those opportunities as wins, right? When you resist those and don't bite the bait, right? You want to just be more of an observer, a sniper, right? Saying, this could work. I'm not fazed by this fluctuation in price, right? This doesn't matter to me, right? But then here, boom, I see something, right? I've identified it. I'm going to take the bait, right, on this high probability setup and manage risk, right? So again, just, remain patient, do your review, reflect your trade management, your analysis, okay, whether it's a trade or the higher time frame or the week, whatever. I'll stop yapping here. I'll stop ranting. I'll render this out. I'll probably put some on my YouTube channel, to be honest. I haven't posted on there in like a couple months. Okay, I'll probably revive that soon. Just working on a lot of content for YouTube, Instagram, Twitter, the Discord entirely, RTO, everything. Okay, so stay tuned, but I hope you guys enjoyed this review. If you guys have any questions, of course, just ping me in chat after this, and I'll see you guys.